Good morning, everyone. Happy Friday. StablePoint Partners, Private Wealth, checking in with our clients and guests. It's been a few weeks since I've talked to you. Actually, it was opening day for the Red Sox. Good Friday. Lots happened since then. Fortunately for the Sox, a lot of losing games, firing staff, not looking so good. We got to pick it up at Fenway Park. Let's talk investing. If you remember that video, I said, hey, a lot of defensive talk has been happening in capital markets. Understandably, war with Iran, skyrocketing oil prices, geopolitical uncertainty. However, stocks were cheap coming into earnings season. What's happened in the last few weeks? The narrative has shifted robustly. 93% of companies have beat earnings expectations. The average guidance increase has been 11%. And simply put to clients, if you follow earnings growth, most times you follow the S&P higher. So again, partners here at StablePoint, as well as some of our research analysts, remain bullish. Second narrative is interest rates. Heard from the Fed, Jerome Powell, Federal Open Market Committee, his term's coming up, may stay on the board. Real story is wait and see was the narrative this week. They're not in a rush. There was a little bit of a dissent on whether a cut should or shouldn't happen. It appears that the Fed is really looking at the war as a neutral stance until it's over, till we get some resolution on oil prices. They got to stand put. What's going on? Why is the market looking past it? Again, the general feeling is there will be resolution with the war. Eventually, oil prices will come down, which means the Fed's in a position to cut. Throw in a labor market that may be softening, little AI job uncertainty. We're going to get some cuts. Is it September? Is it December? Is it the first quarter of next year? But earnings are growing. Fed is going to be cutting, generally bullish for the market. I think my last interesting story, Tim Cook stepping aside at Apple, a lot of talk about memory chips. And there's been a lot of talk about industries and supply shortages as a result of big pushes in capital spending around AI. So if you think about our last memory chip shortages, they're really around the pandemic in 2020. That was a supply issue. Right now, we're just seeing manufacturers shifting to the insatiable demand that we're seeing around chips, AI, infrastructure build out, and data centers. If you look at this week, companies across the board in tech had huge double-digit days off earnings. Seagate, looked at Qualcomm, AMD had a big week. Again, we're back on to, hey, focusing on this spend on AI. Some of these SaaS disruption stories that I talked about a few weeks ago have rebounded. I think there's some opportunities there. But again, this is a diversified portfolio story. We're not maintaining for clients to be overly aggressive. Focus on your plan. That's what we do at StablePoint. But I think there's a real bullish undercut that continues to build. We get this war behind us. Watch out. So appreciate the trust and confidence. Hope you have a great weekend. Spring's going to show up. Maybe the Sox turn it around.